Good day everyone, this is Patrick from EasyFX Code Trading System, and it is Sunday the 25th of August 2019, and we'll take a look at the spot gold and dollar yen pairs for the week ahead, the fourth week of August and the last week for the month as well. And just to recap for last week, Friday was the big move. This was in response to the US Fed Chair Powell's statement at Jackson Hole, and where it just powered through from 1500 level all the way up to 1530, and that's a 300 pip move there. It had been constrained for the most part of the week in well, not that narrow range, but relative narrow for spot gold is about 180 190 pips range. And if we look at the 4-hour chart, that was the move from the 1500 level up to the 138 Fibonacci extension, and tried to retest the highs, but fell short. On top of that, there was also further trade tensions as China imposed 5% tariffs on US goods, and in retaliation or in response to China's retaliation, US President Trump imposed a further 5% increase from 25 to 30% on Chinese goods as well. So further escalation in the trade wars, and this fueled the flight to safety for spot gold as well as Japanese yen, which we'll see later on as well. So, but with further rate cuts looming, starting with next month's Fed meeting, although Fed Chair Powell was elusive and not committing on the rate cut just yet, but he did mention that may be a possibility further down the line with the unknown factor of the trade war. Alright, after this bullish close for this week, there could be some consolidation and probably a pull back to the 1510 area before any attempt to try to break the next resistance zone, and that's at the 1533 1535 area. It still needs to hit the 162 Fibonacci extension level at 1544. Look at the weekly chart, and it's it's still constrained from this resistance zone. So yeah, there could be further consolidation and further build up of momentum, bullish momentum, and we'll see what the new pivots are for next week and where the weekly pivot is going to be. Alright, there are a few US news this coming week with core durable goods orders on Monday, consumer confidence on Tuesday, and with the preliminary GDP figures on Thursday. Let's take a look at the dollar yen pair, and similarly with the rebound in spot gold, dollar yen fell, and that's the flight to safety to Japanese yen. So the dollar is being sold off and Japanese yen is being bought. So this was reaction on the Friday to the statement from Fed Chair Powell at Jackson Hole, as well as the trade tensions between US and China. For the whole week, the dollar yen could not break above the previous swing low at the 100 pip here at 106.78, and it's fallen to hit the weekly S1 level at a 105.30 area, and just above the 162 Fibonacci extension level. So we'll see whether this support zone will hold, and let's take a look at the weekly chart. There could be some consolidation first next week before any attempt to break down further, and all depends on developments in trade wars, as well as the outcome of the G7 summit on Monday. So we'll see how it plays out over the next couple of days at the start of the week, and we'll follow up on Tuesday and Thursday for daily analysis. Meanwhile, have a good trading week, and cheers.